It has finally happened. We have talked about this so much on this channel. You have written so many comments on this topic, and looks like NIO management finally is about to deliver. So we have talked about the issue of profitability of NIO for probably since the beginning of this channel, and NIO management constantly guides for profitability. So they have talked about breaking even at the end of 25, at the beginning of 26, and we have even recorded a video. Our previous video about NIO was about breaking down the numbers and seeing like, okay, we all want profitability, but how can NIO actually achieve that? And we have shown that this is not a simple issue. This is something which NIO has to work on a long time and to deliver amazing numbers for like 2 years, something like that. So finally, NIO management addressed this issue, came up with the plan. The plan looks interesting, it looks doable, it looks ambitious, of course, so there is no promise that this will happen, but finally we have something concrete. And today we're going to talk about this, of course. We're going to talk about Q4 and yearly results, which are about to come out on March 21st. And there's gonna be a few numbers there which we need to look at. And we are going to talk about Onvo fiasco, I would say, because let's face it, Onvo is not delivering for the past few months as it should have delivered. So Onvo president came up for the interview and actually explained what had happened and what are the plans for the future. At the end, we will talk about how Wall Street analysts are kind of lying to you about NIO stock and their price target, and that if you are kind of guiding for some price target based on what financial analysts from Wall Street investment firms are saying, you need to listen to this. Hello and welcome to the Market Monkey channel. My name is Vadim. Today we're talking about NIO, and let's jump straight into William Li, CEO of NIO, interview which he had a couple of days ago, where he finally talked about cutting costs, about investing in projects which have high ROI for the company. And I know you have written about this countless comments about how R&D expenses are too much, about how marketing expenses are too much. So he finally addressed this. So if you're not really sure what I'm talking about, just a quick recap. NIO is growing nicely. NIO's revenues are growing all the time. The problem is that NIO's expenses are kind of over the top, and NIO is nowhere near profitability at the level they are operating right now. We have talked about this on the previous video. By the way, you can go and watch the previous video. We've broken down all the numbers there. So what happened is that R&D expenses for NIO in the past 3 years are just insane. So in 2020, R&D expenses for NIO were about $373 million a year. And in 2024, they were at 1.8 billion. So they have grown over, what, 3 years? 4 years? They have grown fivefold. I'm not sure the company, by the way, grew fivefold. We don't know a lot about marketing expenses because they're not broken down this neatly in the financial statements, but based on what has been said, they are in billions of RMB, so they are a big chunk too. And a lot of you has written about what is going on with R&D expenses. They need to cut these expenses, and you're absolutely right, because if we look at NIO and if we look at operating income of NIO, so kind of you have the revenues, you have the gross income, and then you subtract all the expenses for R&D, for marketing, for general administration, stuff like that, and then you have operating income. So if you look at the operating income of NIO, you will see that in 2020 they had a loss of about $700 million. 2021, pretty much the same, loss of $700 million. And starting 2022, loss of 2.2 billion. 2023 and 2024, loss of 3.2 billion in each year. So you see that the situation is kind of getting out of control together with the expenses for R&D and marketing. And finally, NIO came to the conclusion that they don't have a revenue problems. Their revenue is growing nicely. They have expenses problems, and they need to deal with this. So kind of right now, NIO will be a company which is growing their revenues and shrinking their expenses. And this is exactly what we have talked about in the previous video, where we try to dissect when NIO will be profitable. So we have talked about that if NIO doesn't cut any costs, they will probably be profitable at around 2027, no earlier. Right now, it looks like this timeline may be coming much earlier together with all of this. So management, William Lee, said that they're still guiding to be profitable, single-digit profitability, he said, by Q4 of 2025. So I don't know what will be the magnitude of this cost cutting, but looks like it's not just words. We have seen some articles that NIO started laying off people already, starting this week. Some people were laid off, but weirdly enough, I have seen articles where people were laid off from sales teams and not R&D or marketing, but we will continue monitoring this. On March 21st, NIO will have their yearly report, and hopefully management, there will be of course Q&A session with analysts, and hopefully management will answer a bunch of questions about like how many people will be laid off, who will be laid off, what's the priorities, because laying people off from R&D department, it's a slippery slope. It's a very delicate situation. Yes, you probably need to do that if your expenses are $1.8 billion for what, the company which market cap is less than 10. But from the other side, you need to make absolute sure that you're not hurting future growth. So this is all for NIO management to kind of deliver, decide. Hopefully they will have some information for us. But NIO shareholders, this is definitely good news. This is a great piece of business news from the company to you, and you have reasons to be optimistic about the company in the near future. By the way, if you found this information interesting, valuable, press the like button, subscribe to our channel, and you can become a member of the Market Monkeys channel. Now let's talk about yearly report, which is about to come out on March 21st, and let's talk about what to expect from this report and where the stock will be going and what surprises are in it for us. So first of all, deliveries. Deliveries we already know because NIO kind of reporting on deliveries every month, so we already know how much vehicles were delivered, and the number is 221,000 for 2024. And this is great. This is a increase of 38.7% from 2023. And now let's stop and look at the plans of NIO for this year. They are guiding for 100% increase in delivery of vehicles. Last year was a good year. They increased 38. You decide for yourself how much is it plausible that from 38 they will go to 100. Now let's talk about revenue. So revenue guidance for Q4 was about 2.7 to 2.8 billion dollars, which means the growth of between 15 and 19% year over year. And again, is it good? Yes. Is it close to 100%? No, not really. So again, keep this kind of in mind with the guidance of the company for the rest of this year. What interesting things can we expect from this report? First of all, we need the revenue numbers to understand. Second of all, I want to see the guidance for this year again. I want management to come out and say we are guiding for 440,000 vehicles. Management said that in some conference a couple of months ago, but I want this kind of in writing during yearly report. That's one. Second, I want to know the plans for NIO brand, for Onvo brand, and timelines for Firefly, because it's a little bit spread. Things are changing, things are dynamic. So again, I want this kind of finalized and see it. Third thing, I want to see what is happening with the margins of the company, because you have seen deliveries are up 38%, revenues are up 19%. So it's kind of half of that. Obviously, gross margins are shrinking. This is probably because of Onvo, because of Firefly. They are cheaper models, so the gross margins are lower. Hopefully, all these questions will be answered on March 21st. First, before market opens, I will definitely be reading this report. I will definitely be watching it. If you're interested in video breaking down this report and what it means and kind of looking for these small messages which might not go into kind of news and stuff like that, write me a comment and I will break down this report for you in a separate video. One more piece of news which I wanted to discuss is what's going on with Onvo. So Onvo, a new sub-brand of NIO, which was released in September, I think, 2024, and everything went okay until last couple of months where deliveries were really slow. So Al and I said that they had 4 major goals for Onvo brand, and the goals were to deliver 20,000 units in 2024, achieve monthly deliveries of more than 10,000 units in third full delivery month, enter the top 3 in sales in the pure electric SUV market in the price range which he mentioned, and achieve monthly deliveries exceeding 20,000 units in 6 or 7 months after deliveries begin. I will remind you, 6 or 7 months is March. So basically, first 3 things were achieved. The problem is right now with the deliveries right now because Onvo will not deliver 20,000 units. And the problem Al and I talked about is with the deliveries during Chinese New Year's and before that. What had happened is this. Chinese government had this subsidy where they distributed 15,000 RMB to people who were willing to trade in their old vehicle for the new electric one. We kind of know this already, and people were not sure if this subsidy will continue in 2025. So people wanted to buy the new vehicle as soon as possible at the end of 2024. A lot of orders were placed for Onvo brand. The problem was that Onvo brand could not deliver all of them on time, so they have told people that the delivery waiting time is between 6 and 8 weeks. People could not wait for this long, so in December a lot of orders were cancelled. What's kind of ironic is that in the middle of January, the Chinese government again reintroduced the subsidy for 2025, but as Al and I said, the confidence was lost and a lot of previous orders were lost, and kind of the whole momentum of sales of Onvo brand that was on the rise, it was lost as well. So he have talked about some problems with estimations and problems with planning. He actually said that this is kind of NIO problem, NIO management problem. He did not try to roll it on someone else, so kudos for him, but this is something that kind of stopped the momentum of Onvo brand. The last piece I wanted to talk about is the NIO stock and the kind of analyst prediction. So if you are holding NIO stock or you want to buy NIO stock and you're looking at the price targets of analysts all the time, I have one major warning for you. Because right now the average target price for NIO stock is about $6.8 per share. This price has been falling for the past year pretty constantly, but again, 6.1 is a lot. But major warning. If you are looking at these price targets and you're basing your analysis and your decisions based on that, look at this. The price target of analyst over the last 3 years is constantly much higher than the stock itself. So if you see the stock, which is trading for like what, almost $5 per share, and analysts are telling you that it should cost 10, you need to be convinced by yourself that it will cost 10, not because some analyst said so, because again, this stock is constantly overvalued by analysts. Hopefully this information was useful, was helpful. If it was, press the like button, subscribe to our channel. Thank you so much for your time, and we will see you in the next video. Take care.